I mean, SoftBank was supposed to be like on the cutting edge of AI investment, and the fact that they're buying OpenAI at this very late stage of their growth stage doesn't seem to imply to me that they've really discovered anything out there. Given that they've been focusing on AI for the last 4 years, they haven't really found any big hits, and now they're investing in the name that is obviously a household name now. So I'm not that confident in this. I certainly don't think they've got the groove back. This is not Alibaba at $20 million, which is what they paid for initially for that stake. What I'm more interested in is how they're going to finance all this, because it does seem that they might come under pressure to let some of the ARM shares go. They've got 90% stake in ARM, still 10% only listed. ARM's under a little bit of pressure, mainly because one is going against its top customers like Qualcomm, and it lost in the more recent court case against them, and now Qualcomm's taking that court case globally. The other thing, of course, is RISC-V, which is an open architecture for cores, semiconductor cores, which the Chinese are adopting at a fairly rapid pace, because they don't want to be seeing ARM's IP being weaponized against them in the future. So yeah, there's a lot of problems with that, and so yeah, I think potentially we might have to see SoftBank maybe reducing its stake in ARM to be able to kind of to pay for this.
So SoftBank arguably somewhat late to the AI party. I mean, broadly then, Amir, what does the Q2 playbook, or what should the Q2 playbook look like for Japanese equities, given the balance of risks out there?
Well, I mean, we came here, I think I came here in early January, and I was probably one of the few voices that have been bearish on Japan. We weren't very impressed with the quarterly earnings that came out for the previous quarter, Q3 for the fiscal March term end. And what we were saying then is that if you look at the operating profit, it was only growing at a mid-single digit OP, while the net profit was being flattered by the weaker yen. Now we're going into the next fiscal year, starting in April, which is now, and I think we're going to have some guidance risk. We got obviously we've been hearing from capital goods companies, machinery, machine tool, robotics, that there's been a deep freeze in terms of investments or orders from the US in the last 3 months. So that's not really being priced in. I feel we're going to see a pretty shocking numbers on the order front coming from the US, because everyone stopped investing. Then we've got the public orders from the US, which have completely frozen because of Dodge and the cost cutting there. So a lot of risks coming through in terms of earnings guidance for this fiscal year. And you got the stronger yen on back of it as well, which would be an extra headwind.